show free to the public. This is the Beginner Live Lab. So, what we do here is we answer basic beginner questions about trading. For those who might be new to the video, what we do is we help people learn how to trade and build algorithms. And building algorithms is a pretty simple thing. It doesn't require a bunch of computer programming or anything like that. Anybody who is trading successfully is probably using an algo. All it is a trading method, so don't let it scare you. Go ahead and zap that QR code, go to the website to see what we do, and we're going to go ahead and take a look at XRP this morning. We had a request from one of our clients, one of our private members, and they had a scenario on the 3-day chart for XRP. So we are going to take a look at that. Give me just a moment. I got to set an alarm. I just took a gold trade here. Give me 1 second. Okay, got that set. Let me head over to the chart. I kind of prepped it. The gorilla is going to join us either later in this live show or will actually join us for the private version. So we're not sure he had a prior obligation this morning, but he will join us today. All right. So good morning, Robert. Good to have you on. I'm going to move over to this screen to take a look at Ripple. In the meantime, though, if you are new to this, if you can join us live, or even if you can't, you can always leave a comment on YouTube. And there's all, like, share, subscribe, all that stuff. But if you have a question, you can ask it. And our private members do have priority. Their questions get answered first. However, we can always answer questions from the general public as well. That's part of why we have this Beginner Live Lab on YouTube for everybody to see. Okay. So what you're looking at here is it's for our guy Be Good over in the private chat, asking about Ripple, asking about using a retracement to define how how this might go. How can he play it? And he gave me a date range. Let's see what he says. Fib question. I'm reading now. It says, can you look at XRP on the 3-day, which is what you're looking at? It's the 3-day chart. Between July 12th and August 17th. Okay, so that's basically from this big wick up to the big wick down. Okay, so he says, I was using both long wicks with fib retracement. Is there any caveat with this setup? Still waiting for possible long entry if algo lines up. So as far as caveats are concerned, first of all, there's the macro. So just to remind everybody, at least what I think is going to happen, doesn't mean it's going to happen, but with cryptocurrency, you are looking at probably a compression for the rest of the year. And everybody got excited and the price went up in the summertime, but I've charted past halving cycles and how this has happened before, where the year before the halving, there is a pump and then a dump. It's something that takes several months to happen. The pump is like in a few days, and then the dump is before that. Now, this wick up, this green hard wick that you see from Ripple, was actually a result of the SEC lawsuit coming to a sort of a conclusion. Doesn't mean it's really done, but there was I believe, a judgment, if my terminology is legally correct, to say that XRP is not a security as long as it is sold to retail. So if XRP were to be sold to institutional clients through whatever mechanism they specify in the court case, then it's a security. And what this did was it opened up the entire cryptocurrency market to not being a security, to not being under the purview of the SEC, or at least not as much as people thought it would be. And that's what caused that big pump. And we're not gonna go too deeply into that whole scenario, but we are going to say is that it did cause this is the kind of news that would move markets, and it caused a big pump. And of course, that calmed down. And when the rest of crypto went down, this all went down with it. And I've got a lot of friends who are XRP moon boys, which I am one of them myself, except that I tend to hold a much more pragmatic view of these things. I've been doing this long enough to know that XRP was going to go right back down to where it was. And that's exactly what it did. And it did so just slowly. This sell-off happened. I actually took some XRP off right here around the 60-cent mark, just because I wanted to use it for some other things. a very small amount I peeled off. But I also wanted to take some profit because I had XRP sitting at this 30 to 40 cent mark for goodness knows how long. So that was that, and now I'm using it in other markets. So here, Be Good is using fibs with these long wicks, right? So this wick caused by the news, this wick probably caused by the Bitcoin dump, which people think is news related, but I called that dump a day before it happened, or the day that it happened. In fact, I called it hours before it happened. And we can always take a look at that. But the way that I would look at a Fibonacci on this, so I mean, look, the retracement from this candle has already happened, and it actually went, it actually turned into like an extension. It went well beyond where the candle began, right? So, Bitcoin's kind of taken its pre-halving year dump, and of course that is, to be expected. But it did affect Ripple pretty hard. It looks like there was a substantial sell-off to where it went down below 40 cents, and that was, quite frankly, when you have a pump like this, that's not unexpected. That's just this pump, even though the news was what it was, the SEC has already said they're going to challenge it, and they won't give up. They're like they're like some kind of like dementia-ridden bulldog that just won't give up, even though the fight is over and should be over. In this case, though, technically, I would be looking. Look, what Be Good has done is gone from the top. I'm assuming has gone from the top of the wick down to the bottom and is viewing this entire thing as an impulse. Okay, so the impulse in this case would look like this. That's how he's viewing it, and that's a worthy view, especially on the macro on a high time frame, right? So on a fib, you look for some levels that price might retrace to on the way up. The problem with this whole concept, this whole trade, looking at this as an impulse down, it's legit. I mean, it's an impulse, but the problem is that it's based on there was an impulse up and a hard one and a news-based one and a market FOMO that happened beforehand. So the compression here may not retrace back up like many think it will. It has made its way like maybe a little more than halfway to the 382 after its bottom here. But we'll look at the possibilities here. If I were to play based on this impulse, then the 618 would match up with some structure here, right? So if you're looking at these candles, and I'm going to expand this out, look, the golden ratio is the 618. Okay, that's where most of the time where a Fibonacci is going to retrace. Okay, so again, for people who are kind of new, this, what I'm drawing a square around, is a fib level. It's the 618, it's the golden ratio. And so statistically, an impulse is going to, once it tires out, it's going to pull back, and the reaction is going to go back to the 618, right? So once this impulse is done, everybody's done selling, all the sellers get tired, then the odds are, outside of any interruption from the market, that the price would come back to the 618. And that's the same after a move up, right? So on a move up, the 618 is a level where price would go down to. So for example, on this impulse upward here, just a prior example of that, you're looking at this as your impulse. Your 618 is right here. You see where I put the arrow, right? So the line for your 618, if you're going to put a line on it, is right here. And you can see that price made its way down to that, touched that, more or less bounced off of that, and then made its way up. So this is how these work, right? So in this case, what Be Good's trying to do is to plan, I'm guessing, a long trade. And if his algo lines up, he's going to go long. Maybe price fools around a little bit. He's waiting for his algorithmic, indicators all to line up, and perhaps it's right here that he goes long. Just making this up right now, and he's maybe looking to go to the 618, and it would make sense if that was the case. The problem is with this is that throughout the rest of the year, I'm expecting crypto to compress. And when everything is compressing, I'm certainly not going to go long on the macro on a 3-day chart. You know, a 3-day chart is a long-term trade, right? So if you have a trade that takes like 1, 2, 3, 4, 5, 6 weeks to form up, that could take as long as 3 or 4 months to play out. And I am not, that's an investment to me. That's not a trade. That's just buying low, and then you're going to wait until next year when prices go up. But I mean, if you're going to sit on a trade for 3 or 4 months, then you know, then that's something. The way to look at it is the way I'm doing it. And I'm seeing Be Good in the chat saying that's exactly how he's got his fib, and was also looking for the 618 as the retracement. But again, the caveat is that you're in a market where on the macro, due to the 4-year cycle, a compression is expected, right? So, you know, I only go long on the macro and long markets. Like if I know things are going to go up, you know, I go ahead and I buy what I think is the bottom before it's going to go up. And I personally think that that's maybe in November, October, it could be even December. I mean, it's just going to depend on what the charts tell me. It's going to depend on what happens in the market. So, you know, now it might be good that your algos don't line up until that time. You know, it could be that your algos are on this high time frame are reading what I'm talking about. It's very possible. So you could end up in the proper trade, but it might take you several weeks to get there. But yeah, I mean, you know, if your algos line up and you go long, then 618 would be your target, which is going to be like a 72. And if you're solely going on fibs. Okay. So we're going to talk about our caveats here. The first caveat is volume. So what we're going to do is break out our fixed range and find out whether or not the actual volume in this impulse down fits everything. And here's the thing about it. Here's another caveat. We don't know that this impulse is over. It looks like it's over. You have a big hard wick here at the bottom, and then prices kind of hanging out here. There's a decent chance that this was the bottom down here. But we don't really know it, and we're never going to know it. But we'll know it, but we're not going to know it before it happens, right? You know that there's a bottom after the bottom. Okay, so that's the trick here. What we do is we use algorithms that we build here at Algo Factory to say, okay, we think this is the bottom. Based on our algorithm, we're going to make a statistical estimation that it's going to go up, and then we go long because we have tested our theory. And we know that this theory is right 65% of the time. And if you get it wrong, you get it wrong, but usually you get it right. And you win more than you lose, and you tip the odds in your favor with your risk to reward, all right? So that's the general thing we do at Algo Factory. And so in this case, you know, we want to make sure that, okay, Algo kicks in, but this 618 is preceded. There's a decent amount of volume here at the 618, right? And the center of that volume is right about here. And with fibs, I tend to front run them. And that means that I tend to buy before the fib, or sell before, or buy before, whatever the action is, whether I'm buying or selling. If the fib is up here, where this line is that I just wrote, because that's where it is. That's where the 618 is. You can see it. You know, if you look right here, that's the 6. I erased that square that was circling it, but then I would usually go before. And if you look, the peak in volume is right before that too. So a nice place to front run that might be like 71 cents, right around there. And you're gonna have a little trouble possibly. It may not make it there because here's your caveat. One of there's the macro, right? Things are probably going to be compressing, and then you have this big gap in volume. You know, the most you could get might be that 382, and then it continues down. You know, you might not make it up to the 618. Even if your algo fires off, the macro is probably going to be against you if you look at history, right? We don't know that it's going to happen like it has in prior years, but history is a decent indicator as to what will probably happen. But let's say your trade fires off down here somewhere and you go long, you might only hit this 382, and this gap in volume blocks you from heading up, and then you head back down. You know, that can happen, and you might be prepared for that. You know, like there's a gold trade that I'm in this morning, and I'm actually prepared with that exact scenario. I'm going to move just so you all can see it, my gold trade here. I got to look at my entry price. P&L. Okay, fill price was $18.99. I entered at $18.99. This is right before the show, and you're going to see this exact scenario be good with the gold trade. Okay, so I entered at $18.99, which is right here. Actually, it's $18.99.28 to be precise. Basically there. And I got into this a little later than I cared to, but I was waiting for a structure to break. And it's inverted risk to reward, but that's because I have an algo that allows for that. It's kind of a long story. But once price touched that 382 right there, then what happened was I moved stop to entry. Right? So now I'm like infinite risk to reward ratio, because look at this, this is the, so this is a 382. So price broke, to look at this structurally, okay? You see that red wick right there? After I entered, price rallied against me, and then it broke this low. And once it broke that, then my odds of success are much higher, and I can move my stop loss to entry, which actually I need to do right now. I forgot to set the alarm to do it, so give me just a second. Modify position, entry at $18.99.28. $18.99.28. I'll do that for now, and then I'm going to review the algo to see if I need to just exit. Just a quick bit of money on a Tuesday. You know what I mean? Just a quick bit of money. Let me reload that. I need to start using the app instead of the web-based. This web-based goes wonky. Okay. Yeah, Algo is saying get out. Let me see. It's going to go lower. But much like my EUR-USD trade, it looks, yeah, I'm out. Let me see. Yeah, got to get out. Close position. Good with that. Okay, quick win right there. Algo says it's going to actually come back up, and I'll actually get another good entry on this. So, and I'm going to have to keep an eye on that too, because this is a nice trade right now. This gold trade is going to keep going down, but chances are what happens right now is going to be this. I'll show you. And this is going to relate to your XRP trade, right? I just have to manage a trade right now. Chances are it's going to come up. What just happened? Get my error out. It's probably going to come up to this order block. It already kind of already has, but I think it's got more room to go. Maybe even up to this wick down right there that the arrow's pointing at, and then continue down. So if that's the case, then I will look for another short. And if not, that's fine. I made some money. I took profit and got out. Quick scalp on a Monday. Back to XRP. The same scenario, except in the reverse, because you're going down, right? So what might happen is if you're going to take this long in a market that's compressing, you may want to consider, let me bring up you guys here. Only looking long-term trades because I'm dealing with vertigo. Can't do much screen time. Okay. So be good. You're only looking at long-term trades. Well, if that's fine, just understand that the macro is against longs right now. So, not to say this is a bad trade, but typically prior to a halving year, after the summer pump, you're just going to get price compressing. So that's the macro issue with this trade. So if you are going to take it, what you want to do is you want to go ahead and look at possibly, let's say that, you enter the trade like right here, and then it starts to head up towards your target. What you might want to do is consider setting an alarm at the 382 right here. And then once that alarm hits, you raise your stop to entry. And that way, in a compressing market, in a market that typically compresses, you'll at least have a safeguard like I just did with gold. and you saw me take profit on it, you'll have a safeguard against that reversal. And again, this is on the macro compresses right now. It's just how it is in the 4-year cycle. You got to know your asset class before you take a trade. You have to understand your asset class and how it moves. So we do just have what do you call it? We got the gorilla in the house. What's up, dude?
Hello, everyone.
The gorilla showing his native side here.
Oh, hello.
That's great. Oh my God, my man, you are here.
What?
What is plunger?
Plunger.
Oh man, that's so funny.
Hey, good morning to all of you guys. Great to be on here. I see that as soon as I get in there. Cowboys putting on a clinic, an absolute clinic. So it's great to be here. I apologize for the lateness. I had to drop my daughter off for the first day of school. Yay.
Yeah, good. That's special. First day of school. You know, she's gonna want daddy there.
Yep.
And that's always a special time. You got to put family first, you know. And we are business owners, so that we can do that. We actually, one of the reasons we do this whole trading thing is such that, you know, if I need to take a day off of doing videos and trading, I can. Today's actually my wife's birthday, so you know, once I'm done with this and editing videos and, you know, all that stuff, I'm out. I'm going to be out, you know, buying food and preparing for a little party, and that's the deal. So we got Gigi in the private chat saying hello. Valor Girl is saying hello to all the V's out there. Apparently there are more than one.
There's more than one. Who would have thought?
Yeah. It might be all the accents. You know, one accent is one V, another accent's another V.
That's a possibility.
So, but yeah, Be Good asked in the, and I'm glad Be Good that you can make it live today, because I think some days you're not able to make it live if memory serves properly. But we were able to answer his question, and it related to my gold trade. I just, excuse me, pardon me, I just shorted gold and pulled some money out of that market as well. Lately, gold has been just a beautiful thing to trade. I think it's always been beautiful, but now that I'm trading it, I'm seeing how beautiful it is. And look, it actually continued down so far, but it doesn't mean it's going to. My algo had me get out because it thought price was going to actually rally up. But gold is rather directional. It's a little bit different of an asset class, but I was hoping for a better entry, and I may very well get one. You know, we'll just see how that goes. But at least, you know, I won the trade, pulled money out of the market. But yeah, back to Ripple. That's all I've got for you. Be Good. It's just, you know, maybe a little safeguard. Maybe once you hit a certain fib level. Again, the 382 also has some confluence here of volume from our fixed range. And remember, our fixed range goes on the same impulse as our fibs. Now, there is actually, that's not all I got for you. That's a lie. Let me offer a different look at this, because look at the price action here. Okay. You have an impulse, this hard green candle up. And then if you look at a lower time frame, you'll notice that price actually came back down and went up again. So let me model this for you right here. Price zoomed up, came down, came up, and then pretty much impulsed down. So here's the problem with using this larger wick as an impulse. You actually have a better defined impulse here that can muddy the waters a bit on how you're supposed to place that fib. So you might want to have a contingency where you do a fib from the top of this next impulse and consider that 618 as your target, which is going to be right here, and then your 382 for safety way down here, which is, again, I personally just would not take this trade in this market. V and I have talked about it enough times where you know, we expect not only for like geopolitical, financial reasons, but also just for 4-year cycle reasons, we expect a compression for the rest of the year. These long-term trades, if you're going to take a 4-month trade, you know, the thing to do might have been to short Ripple instead of trying to find a long for it. And if you do find a long for it, I would wait until after the entire market capitulates, if it does. We're not saying it's going to, but we're saying that it probably will. And I don't know if you've been watching, but historically we're pretty damn on with this stuff. We have a pretty good idea what's going on. We're not always right, but we're darn near, especially on the macro with fees, knowledge, and information. So For your cycle, man, got to watch it. But if that's the case, again, you got a 618 that's a bit lower. That's going to be at the 67.6 cents level. And then with our fixed range, what are we going to do with that? Fixed range. Our primary volume node is going to be below that 618, pretty hard below that, which is going to be around 62.8 cents, so about 63 cents. Price will be attracted to that, but then you have this volume block that's above that. I mean, overall, this is just not a trade I would take. Honestly, I would avoid this trade personally, but you got to do what your algo says to do. But remember, we don't want to chase trades. You don't want to take a trade just because it's there. You want to make sure that you are evaluating this trade and it's a good probability trade, because you don't want to be a crackhead and just trade because you want to take a trade. That's not how trading works. You have to take trades that are going to win. Otherwise you have to lose a trade and then win, two more, or at least something like that to make it back. You're going backwards at that point. So honestly, this is a trade I would simply avoid. But unless you see a capitulation in the entire market, unless Bitcoin makes its way down, in my opinion, to anywhere between the low 20s to kind of the mid to high teens. If Bitcoin makes its way down there and it's kind of towards the end of the year, that might be a good time to start swooping up some crypto for some longer term moves. But that's what we're looking at. So that might require a lot of patience, but this, and I can see that you already thought of this from the comments, is that this second kind of impulse might be the way to go. And yeah, it's the first thing I saw before the show when I looked at this. So you might have that issue. We are now at the end of the free to the public live lab. So I'm going to throw the QR code up and let the gorilla give us that send off. Let's go to the private group.
Absolutely. Thank you all for listening in. Listen, don't hesitate, don't procrastinate, and don't vegetate. Okay, don't vegetate. Join us, Algo Factory Tech. Be a part of the one solution that's going to help you profit from the time that you're in, the days that you're in, and show you how you can capture profits from the market to prepare for what's ahead.